we were talking about Bitcoin and the historical tendency of a all-time high being broken as actually a pretty bullish signal. It'll be very interesting to see if we in fact have something on our hands here. I continue to hold my position, IBIT, and I know to the crypto super fans this is sacrilegious, but I do in fact own Bitcoin via Coinbase as well as through an ETF now. And I actually, part of the reason that I am willing to hold some Bitcoin to stay bullish is because ETFs have come into the picture. Now, some people would argue, hey, Bitcoin is meant to be this unregulated, no centralized entity for storing money. But at the end of the day, to me, this brings accessibility. The ETF world is huge, right? So many people who watch my streams who are maybe not stock traders, or they don't have any kind of history in the stock world. Stock market in the US is huge. And the US has a lot of people that on average have more money than other places around the world. And so accessibility to both retail consumer traders, right, as well as perhaps even institutional money or 401k accessibility, to be able to put this thing in your Roth, to be able to put this thing in your stock portfolio, to me is a major bullish catalyst. Now you do also have the big halving event, which everybody is kind of excited about. And I don't claim to know everything about crypto by any means. This is why my position size is very, very small. But despite it being very small, it's up $1,200. It's crazy. I mean, this is not a big position, guys. 92 shares at $24 a share. It's not that big of a position. And yet on this, quote unquote small position, I'm up 50% plus. It's a crazy move in the market. And many people who are wondering, Nick, what's your thought on Bitcoin in terms of where it can go? Well, I think the all-time high is a very easy place to start. I think that is likely to get hit. But where we go from there is the big question. Are we going to break through that? And is that a signal to stay long, as it has in the historical kind of price action of Bitcoin been? When you get this big break through the all-time highs, it precedes a bigger break to way bigger all-time highs. Is that the scenario that we're going to see play out? I have no idea. However, the risk to reward, in my opinion, is pretty good. If I lose every cent that I have in Bitcoin, that's something you kind of have to accept if you're going to be touching Bitcoin, in my personal view. I still think the risk to reward is good because it could quadruple in the coming years. And if it quadruples, I'm not saying I think it will quadruple. I'm saying the risk to reward is, okay, think about this, guys. You're risking 100% of your capital. That at any time you are touching cryptocurrency, you are risking 100% of your capital. But the potential is like thousands of percent. So let's just say it's 1000%, right? So your risk to reward is pretty dang good if cryptocurrency does stick around. Now, again, let me reiterate, I'm not like a huge mega believer, but momentum favors the bulls right now. It seems to be back in the picture, and we'll see where it goes. That's my opinion on Bitcoin. It is the smallest position in my portfolio, but it's something to at least mention, as it's been exciting to watch recently. S&P 500, in my personal view, looks a little bit top heavy. We'll see where this thing goes, but it's been trending up very well. This is not something I'm looking to fight. I'm not looking to short this market. I'm not looking to bet against this market by any means. But in my view, I think that they're a little bit they're better places right now. That's my opinion. You guys know from last week, I am long gold and I am long oil. Okay. Oil and gold are two positions that I have on right now. We really outperformed the market last week. Let's see if we can do it again this week.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
The S&P 500 was up last week, but oil, man, oh man, oil had a huge run last week. And I still am in my position. My stops are trailed. I'm kind of holding on loosely to this position. It's like the old song, hold on loosely. And gold, there it goes, guys. We are still in the trade. And don't mind this take profit, or this is not a take profit order. I'm just using it to track my position. If you want to actually see my orders, this is my GLD position. We are up 2,700 bucks, which is crazy because, again, not a huge position for me either. This trade I mentioned yesterday inside of our room, our VIP room. Let me get a second here to show you this. Give me a moment. I'm going to pull this up. Commodities trades are flying right now, man. It has been a crazy, crazy couple of weeks here. So anyways, I mentioned that on gold, the play for me is to look for pullbacks. If we do get a pullback, I'll add to the trade. If we don't, I'll trail stops and let this one run. But we are floating some good profit on both oil, gold, Bitcoin. All trades there inside of the room are currently in profit. So really not so bad. I want to take a quick look here, guys, at the old commitment of traders data. See where we're at with this. So I'm going to go over to COT data really quick. Oil, this was promising. I am in an oil position. I told you guys that earlier. And I like to see, now, of course, I will say this. A lot of times people overestimate the ability of the commitment of traders data as if it's some sort of magically predictive tool. It's not, but understanding the flow of traffic when it comes to what big money, institutional money is doing from the commitment of traders report is key. This data gets imported automatically each week. We have a system that goes and digs out the data, pulls it in, and then projects it here for our users. And the week-to-week filing is very useful to me. I know a lot of people like to look at this section of the screen, which is good if you are more longer-term focused. Why do I say that? Well, because these positions change very, very gradually. In fact, the yen has been a long-term short for like a year and a half now. So just context-wise, understand that this top section is much more oriented towards longer-term, I would say. Right? If you're trading, holding on to trades for 6 months, 12 months, then maybe this is more your cup of tea. But if you are an active trader like myself, I like this section. This is the latest week-to-week filing where traders can get an idea of what's actually kind of changing in the latest filing. So we highlight this software, it's like a heat seeker. This COT heat seeker, maybe that's a cool nickname for it. Anyways, this heat seeker basically shows us what happened in the latest filing, and it includes not just the change in longs, but the change in shorts as well. So it gives us a full view. What did they do as their position? I like to use the analogy of Mr. Banker, right? So Mr. Banker is, the collective of all these big money. And what did they do? Well, they added longs and they decreased shorts. So they have longs and shorts across the medium in terms of institutional money. There's a lot of firms that are short. There's some that are long. They don't all uniformly agree. However, when you see a mass move like this, where collectively they added a lot of longs and they decreased their shorts, that leaves us with a pretty bullish report. If that makes sense, do me a quick favor and type yes in the chat. If that breakdown, how we're using the week-to-week filing and why that is more important for traders, if that makes sense to you, just drop me a quick yes or Y in the chat, just to let me know that you understand this concept. Another one that's interesting, guys, the NASDAQ and silver. These were our biggest week-over-week sells in the institutional money flow. What do I mean by that? Well, let's do the NASDAQ. On the number of long contracts changed, they decreased longs. And noticeably on the short contracts, they actually increased pretty significantly their shorts. So you got all that in mind, and that leaves you with a calculated minus 5% shift. Pretty significant selling. This is why I've mentioned in the recent times, I am bullish on stocks this year. I have been bullish since 2023, the beginning of 2023. Actually, I've been bullish since 2022. Which was a painful time for me. Granted, I made a really good bit of money in 2021, and I was able to kind of recognize that the circus was kind of ending. And so I didn't take massive losses on the turn of 2022, but I did have a tough year that year. 2023, though, we went kind of heavy on the tech side of things and it just rocketed. So that was a great year. 2024, I am still bullish on equities as a whole. But I do recognize that when you do 8% in the beginning of the year and the market on average returns about 10, you got to ask yourself, is the market just priced for perfection here? And are we just going to see a straight shot, continuation, or is the market a little bit too optimistic? And in my view, I'm still bullish, but I think that the market has run ahead of itself. I think we're, as some people would say, ahead of our skis, so in terms of that. But that's my opinion. When you take a look at things like the NASDAQ, I do think that we have room to pull back. And again, that doesn't mean I'm an outright bear. I just think that these things are things you don't want to be caught chasing, right? So you got to be calculated in how you approach these indices. A lot of people, and I made a post this weekend, and it resonated, I guess, with a lot of traders. A lot of people, when they see indices run up like this, you start hearing all over social media that indices are just easy to trade. You just buy them and they go up and you make money. But remember, we've done 8% on the S&P 500 and the average is 10, right? So that doesn't mean that it can't keep going up. It could go up 25% this year. But my point is, just be careful when you recognize, well, everybody's saying it's easy to trade them because they've just been going up, but they don't always go up. If they average 10%, but we've done 8, you can see it feels very, it's like a candy shop right now, but it doesn't end well if you just chase. So something to think about. Okay. Let's keep going. I want to take a quick look a little closer at gold. So I mentioned that for me this week, I do have a long position on gold and oil. So commodities, why am I so bullish commodities right now? Well, the short answer is that the system kind of helped me spot that. Between the COT data, here's gold. Oil has dropped back to a neutral now, which I'm comfortable acknowledging because it has run its course pretty strong. I am still long. COT data looks really good. The commitment of traders data for gold didn't look too hot. Not terrible, but not great. Regardless, though, the overall positioning of gold is pretty strong. Let me explain that. People wonder about our COT algorithm all the time. How is it scoring the COT? I'll do a quick breakdown for everybody if you guys would like, because I know a lot of people have that question. So the Edge Finder has a -1 score for gold in the category of commitment of traders data. Let's do this together really quick. It sounds complicated sometimes, but it's really not. Let's do this. Okay. All we need is we just need these 3 columns, okay? To understand the algorithm behind the Edge Finder when it looks at commitment of traders data. Again, it calculates all this stuff automatically. The back end is pretty fun, and maybe not fun to everybody, but for Frank and I who design this, and then our developer who builds stuff, we have a blast doing this. Let's go through the gold calculation of how it's getting a slightly bearish read. Now, a -1 score on the Edge Finder is slightly bearish. If you were to get like a -3, that would be very bearish in COT. So we're getting a slight bearish read on gold in terms of the commitment of traders data. Let's break it down. This section, the long contracts, showed a slight increase in gold. So that would give us +1. That's bullish for gold, right? Institutional money picked up some longs. Okay. But then the second column, they also increased their shorts. So that's -1, that's bearish, right? So we're just neutral, right? So we can take that and we could say, well, so that's kind of mixed, right? And then in the end, wait just a second. Do we have ourselves an issue here? Hold on. The long contracts outweigh heavily the short contracts. This actually should be +1. And I need to immediately double check that. Let me make sure that this is actually, I know the COT data is right, but it looks like we might need to just make sure we refresh this data. So gold actually should have a +1 in COT, guys. I'm not sure what's going on here. Maybe some calculation mess up is happening here. Because again, we just broke that down where the net positioning is bullish gold, but then in the week over week, they added some longs, they added some shorts. So I actually need to, real quick, I'm going to send this to Frank and Giles right now, who are on the back end. Can you check on the COT scoring for gold? It should be +1. Wow, sorry about that, guys. Yes, this should be a +1, I'm pretty sure. Unless I'm just mixing something up. Again, after looking at the commitment of traders data, gold is a bullish read overall. But then in the latest filing, what did they do? They added some longs, they added some shorts. That should leave us with a, oh, you know what? I know what it is. I believe I know what it is. And this is, you know what? Never mind. Never mind, guys. I apologize. It's because, ready? Here's the final factor. The algorithm is smarter than me. It compares against the US dollar. That's why. In the latest filing, what we saw is a pretty bullish week for gold, for the dollar. We increased longs, we decreased shorts, and the net positioning for the dollar is mixed. So that gives us +0. And then we get +1 for the dollar, -1. That's how you get the overall bearish read. I get it now. So you can see there's a lot of computation that goes on behind the interpretation of COT. So again, gold itself is actually, they had an increase, but then the problem is the dollar did as well. And the net decrease was pretty noticeable as well. So something to think about there. Anyways, I also want to take a look at something else here. Let's look at the dollar index itself here this week. So the dollar index has some news coming out this week. It's actually a pretty big week of news. Forex Factory, we'll pull this up really quick. So this week, what we have is ISM Services PMI tomorrow. So that should be market moving tomorrow. But then things start to heat up Wednesday onwards. So what we have is the Bank of Canada, their rate decision, ADP. This is, of course, the advanced, non-farm payment. It's the private sector. This will be pretty meaningful. This will move CAD pairs big time and also probably gold. And then on to end out Wednesday, we have Jerome Powell speaking and JOLTS job openings. So we have a ton of market data coming out starting Wednesday. On Thursday, we have the ECB press conference, which is going to be huge to see what they do next on Fed monetary policy. And then finally on Friday, we have NFP, which everybody knows and loves as a pretty volatile market event. So should be interested in all of that as it comes out.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.